Hey everybody, welcome to Altcoin, Bitcoin, Crypto, ABCs to Wealth. I want to ask you a question today. What if your money became worth only pennies on the dollar? That's a question that was posed this morning uh, by the Working Money channel. What if your money became worth only pennies on a dollar? Well, I want to take a look at it and consider what our money is worth generally today. Not an exact, but generally. As we see here, it says, according to the Bureau of Labor Statistics Consumer Price Index, prices in 2017 are $917.10, 10% higher than the average prices since 1950. That means that the US dollar experienced an average inflation rate of 3.52% per year during that period, meaning that the real value of the dollar has decreased. And if you look at the chart here to the right, you can see from 1950, the buying power of the dollar in 1950 and the buying power of the dollar in 2018, 2017, 18, 19. Here, it takes more dollars to buy today than it did back in 1950s. Now, that being said, you got to consider too, what is the alternative? Right now, we see the Feds printing money in the repo market. For those of you who don't know, the repo market is basically that market where the banks borrow money back and forth during the course of business during the day, and then at night they settle accounts, and then the money is transferred back and forth. There is not enough liquidity right now in the banking industry and in the financial industry to be able to take care of just the money going back and forth between the banks. So the government is printing money uh, basically from nothing, from thin air, based off of nothing, the money that is valued by nothing. At one point in our country, back in the 50s, we had a gold backed dollar. From the 50s up until 1973, I believe it was, when President Nixon took us off the gold standard and then made it to the point where the US dollar was backed by nothing. No physical gold, no nothing, and it could be printed at will. So that's where we find ourselves today. We find ourselves in the repo markets, those markets where the banks borrow money back and forth with each other to be able to keep their business afloat. Not being able to have enough liquidity in the market to be able to even just take care of their own business affairs in between the banks at night after all the daily transactions are done with their customer, meaning us, the retail investors. Now, with that said, the value, of course, of the dollar is decreasing, and the more that Uncle Sam prints money, the less value we have. So, really, in reality, what you have is you have dollars that are worth less and less and less every single day that these guys print more money. And so that really gives you no incentive to save, and it really gives you no value to your savings, because as they're printing money, your value is going down, and that money that you socked away in a bank account is gaining nothing. It's actually losing value overnight when these repo deals are going back and forth. And in the long run, you end up losing because the banks now have built into their paperwork that we sign when we re-up with all the new things that they give us to e-sign or to sign physically when we go out in a bank, that at any point in time when they need to, they can take money out of our accounts. They can charge us negative interest. We pay them, basically, is what it comes down to. We pay the bank to hold our money, to be able for us to use our money. And we actually pay them interest on our money. So nowadays, the way it goes with a lot of banks around the world, the bank will take your money, say take $1,000, and in order for you to be able to keep that $1,000, you need to pay them $10 or $15 or $20 to be able to hold that money in their bank. So the $1,000 that you actually have put in there has actually lost value immediately as soon as you put it in there. And the longer that it sits in there, the less value it has. So when you pull it out, you end up getting less, having less to pull from when you need it down the line. Now, over the past few days and or so, I've been hitting on XRP and cryptocurrency and the market that is digital assets that is forming. Um, and I want to encourage you guys that for those of you who are early investors in XRP, in the company Ripple, the product uh, XRP, which is the token that they use in their system, for those of us who have invested, I want to encourage you just to hang on. You know, a lot of people say, well, how long is it going to be? You know, I'm tired of holding on. I'm tired of hanging on. I'm tired of the money I invested just sitting there doing absolutely nothing. Well, I can understand that. The frustration is real. But let me ask you a question. How long did it take for the railroads to be built in this country? How long did it take for them to build the railroads before they could actually transport one load of material back and forth and or passengers back and forth across country? How long did it take? Do you know? Well, here's the answer. It took 6 years for them to build the first Transcontinental Railroad, where the Western United States and the Eastern United States were actually um, brought together. Central Pacific coming from California out into Utah, and the Union Pacific coming from the borderline there of Kansas and Missouri coming out into Utah as well, and then joining where the Golden Spike was driven. The Transcontinental Railroad, it took them 6 years. Imagine these guys who put the money out and invested into the system of this railway. It took them 6 years to build that railway and to get it joined together so that they would be able to move product and people back and forth instead of people having to traverse um, the land by ocean, by using boat to go down around the Horn and down around South America and back up and coming over to the West Coast. Now you could do it on a railroad. But it took them 6 years to get the rails laid down. And then it took even longer than that for the general public to adopt it and to be comfortable enough to use it and to be able to see the transport back and forth of goods and services and people on the Transcontinental Railroad. So when we consider the cryptocurrency market as a whole in general, and we consider XRP, and you're looking at it and the price is down in the low 20s, I say be encouraged that while it's down in these low 20s, this is a great buying opportunity. I'm buying as much as I can, when I can, where I can, when I have the cash. And these prices are down here. It's absolutely phenomenal that these prices would be down where they're at for as long as they're at. It's a great opportunity to buy, so when things go through the roof, you will rise with the tide with everybody else who is lifted up by the rise of the cryptocurrency market. And when the market rises, everybody who's in whatever project they're in, whether it's Bitcoin or XRP or XLM or Ethereum or uh, VET, it doesn't make a difference which one you're in. The market is going to rise. Now, over time, you're going to, lose some, and some companies are not going to have a use case, so they're going to go belly up. But the ones that have a use case, they're going to rise, they're going to stay, they're going to grow, and they're going to increase. Just like the railroad did, just like the internet, just like Amazon and Google and Apple and all them. Everybody who got in and was early adopters into them and invested early in them they're set for the rest of their life. But they continue to do what they've been doing because they know that early adoption and early investment into these things, number one, is a good thing, and number two, takes time. But when the time is up and the thing goes through the roof, then the all the time that you've waited is going to be well worth the time you put in. Now, I want to um, take a quote from Bitcoin Marco on Twitter. Here's what he said. He said, people spend $100,000 on college, but they won't invest $1,000 in crypto because it's too risky. And see, that's the whole thing. They think it's too risky. But would you rather invest $100,000 in college and not know whether you're going to have a job when you get out? which is really the case with a lot of people today. You got people that are graduating with these degrees, they're 100, 150, 130, $160,000 in debt, some 200, $300,000 in debt or more. And they can't find a job in their field, and they're working at Walmart, or they're working in a convenience store, or they're working in a hospital where it's not their field and it's not what they studied, but they've got to do something to pay off their bills, and not only to pay off the school bills and everything else that came along with it, they also have to just live. And if they decide to have a family after they've gone to college and all that, along with their career, then they've got to raise a family on that, plus all the money they're spending on the hundreds of thousands of dollars for college that got them nowhere. Not saying college isn't good, but you need to use your mind and really think about and plan out what you're going to do with a college education, as opposed to what you're going to do with investments and assets that could create income for you, as opposed to college that can't guarantee you that. Now, I just want to encourage you with one more thing too. You need to understand that those of us who are in XRP, we are still early in this adoption. Here's the product adoption curve. We've seen this a million times by hundreds of people in the space here. But you have your innovators here in the early part. Then you have those who catch on and see the innovation, and you have the early adopters, the visionaries. And I believe that's where we're at here. We're in the early adoption stage. We are probably right about in this area here in the last section of it before we get to the early majority. And then you get those who are pragmatic about it and they buy in, and then you get the FOMO, the fear of missing out, and you get all those who jump in right here, and it continues to spike the price. And then you get the downtrend, and then you get the conservatives who are the late majority, and then you get those I call the sluggards or the slackers, and they're the skeptics who get in later and say, well, if it went up one time before, it should go up again, and it's a 50-50 whether it actually does or not. So that's my spiel for tonight. I just want to encourage you that if you are invested in XRP, stay the course, because you will hit that high point there. And just like the railroads took 6 years to build, and then it took time for adoption, that's where we're at right now. They're building, they're laying down the plumbing, as has been said this past couple of weeks. They're laying down the rails, they're putting in the foundation, and all the things that take to build this whole system. And then they will open the gate, and when they open the gate, then the water will flow, and when the water flows, then the water will rise, and so will we along with that water, which is called liquidity, which we're finding it difficult to maintain liquidity in the markets that we know today around the world globally, not just here in the US, but globally. So like and subscribe if you like what you heard here, and check out the links down the bottom. If you're in digital assets and you want to protect, there's a link down below for Ledger Nano S or Ledger's products in general. And if not, then go to the website. That's cool. And there's a couple other links down there you can check out as well. Take care and talk to you again.